The following is a presentation of TFNN.
'" Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the July 14th. Magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a fantastic weekend. Let's make sure we do all that we can do to have a magical and magnificent Monday. And I'll do everything I can during the next couple of hours. And welcome to our new listeners out there, new viewers here at TFNN. As we like to say, welcome to the Hotel California. Because once you check in, you'll never check out. We've got 9 hours of live programming with extraordinary technical analysts, folks and contributors that will provide you their viewpoints using tools that each of us have created to help identify where the markets are headed to. And that really applies to all indices, all stocks, all ETFs, all commodities, currency pairs, whatever it is. And this is a call-in talk show. That means you can call in. We can take specifically a look at your equity. You can do that by calling 877-927-6648. Again, my name is Steve Rhodes, the morning anchor that gets things kicked off here at TFNN. Each trading session, I'm here for the next 2 hours, and I'm going to do everything I can to teach you how to master the tools for trading. That means using tools such as the A to B equals CD pattern, Fibonacci expansion and retracements. Both those help us to set up Gartley and butterfly buy and sell patterns. And, of course, we love to use those Japanese candlesticks because it's the bulls and the bears, the sign makers of the markets, that are always providing us with signals as to what the markets are doing. But here's the thing. You and I, we've got to think like a strategist. That means we use tactical tools, but we've got to think like a strategist. That's what I call mastering probability. Also happens to be the name of my daily newsletter service, and it's available here at TFNN.com. You can sign up for that service by clicking on my name on the homepage of TFNN.com. Then click on Mastering Probability. You can test drive that for 30 days, unconditional money-back guarantee, so there is no risk to you out there, folks. Let's do everything we can to think like a strategist. It is Magnificent Monday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow Futures up 81 points. They're trading on at 16,962. S&P Futures up 8 1/4. They're trading out at 1970.75. NASDAQ up 18 points, 19 points, trading at 39.16. King Dollar back 1 penny. That's only trading at $80.21 in the hard currency market. We've got a lot of movement. Goldilocks back $31 as we speak right now, dropping. We'll take a look at gold here momentarily since that's the biggest mover. Of course, if you listened in on the show last week, I have mentioned to you many times, what could go wrong with gold moving higher. And what I said was it's called the large commercial traders out there. Because in the CFTC data that was released here on Friday, they continued, I say, to ramp up their net short positions. The big money was saying, hey, I think Goldilocks and silver, in both those cases, are going to move lower. So we'll go take a look at levels that we need to monitor out there. Light sweet crude back 11 pennies right now. That's trading out at 100.72. A quick peek across the globe out here. Let's go see what's going on over in Germany. And congratulations to Germany, especially to the German football team that won the World Cup out there. Good match yesterday. I must say the match on Saturday between Brazil and the Netherlands, that was not much of a poor Brazil. In any event, the DAX out here up 85 points, so it's celebrating. Whether it's the win or not, it's up about 0.9 of a percentage point out there. The FTSE's up about the same. It's up 55 points, 0.83. Over in Asia last night, green arrows across the board. The Nikkei up 132 points. Hang Seng up 113, and the Shanghai up 20. That was 1 full percentage point. Again, our call number 877 927-6648. Let's begin by taking a look at Goldilocks out here. Where do we start? Let's start with, let me put this chart up on the screen here. Let's first start by putting this chart. Now, all of my data is coming direct from eSignal. I use 3 different charting services, the eSignal charting services, Ensign, Windows, and the Ninja Trader. Take a look at this wide-ranging bar. This is a daily chart, by the way, that we're looking at inside of gold. This is one way to take a look at Goldilocks. You can see this morning here making its way back to the 0.382 retracement. So we look at retracement levels. And retracement levels are just simply utilizing swing points. Swing points are where we see the most significant change in price trend. Well, inside gold, that would take us down to the low on June the 3rd, that level 1240.20, taking us up to a high that took place on July 10th. That was last Thursday, and that level at 1346.80 out there. You go from the low to the high, 1306, where it's trading at right now. It's trading at 1306.70. 1306.10 is your 0.382 retracement. When you pull back to a level like that, first of all, this is not just a wide-ranging bar. This is a bearish engulfing candle that has consumed all the trading since June the 20th out there. You know what that says? That says that this trading session here on June 19th, it may have been not an initiation move after all, because gold really didn't move that much higher. It did form a little 3 drive to a top pattern out here that was on the trading session of July 10th. That says with this bar out here, we ought to see gold pull back most likely at least to the beginning of this breakout, this last wide-ranging bar. But as you know, we don't just look at the wide-ranging bar. We go take a look at a couple of days prior to that. And that says the swing point out here, this little doji candle on June 17th. That is the target. That's the minimum target, in my opinion. Now, that's the minimum target if gold can break below this black diagonal line on my screen. You say, what is that black diagonal line? That, folks, there is a trend line. That's a trend line that comes back all the way into October 5th, 2012. If you take a look at the high out there, that takes us into the 1798 area. So we're using the touch point. That specific day is October 5th, 2012. Next touch point that I'm using from a trend standpoint happens to be the high of March 17th. A lower high, by the way, compared to the high that came in a couple of days ago. That high, by the way, is at 1392.60. Now, what gold did, it's interesting, what gold did as it moved up on that nice wide-ranging bar day, that was on the June 19th area, June 19th date, I should say, moved right up into that trend. And it hesitated. The only way that it broke that trend was by moving sideways. And you know, Stevie Sun does not like to break a trend by just moving sideways. That's the lazy way to do it. Instead, what it should have been doing was moving higher with some type of conviction, some additional acceleration. And that's not what really has occurred out here. So price, you can see, has really touched the bottom of that trend line. If gold gets back inside there, then the next area to really be monitoring is going to be the 1263, 1258, that bar from June the 17th out there. That area starts to fail. Then you could be looking at A to B equals CD to the downside inside of gold. So what gold is doing is testing the trend line that it broke out of, but it's not doing it the way that you would typically like to see things happen. And if we go take a look at the weekly chart out here, I didn't update it for the data that came in over the weekend from the CFTC. I did go take a look at the spreadsheet. It takes me a little while to go ahead and update things. If you're watching us on TigerTV, which I hope that you are. You might be listening on your radio or your mobile device at TFNN.mobi. We thank you so much for doing that. The bottom of my chart, not the very bottom, but the second panel up from the bottom, that's your CFTC date out here. Let me do this. Windows tile. No, I don't want to do that. Do I? Yeah, we can do that now. Pull this back out here. And here's the net shorts. This is just taking a look at the large commercials as a percentage of open interest. This was last week's data, and they ramped it up even further out here. And that says that the gold wants to move lower. So on the weekly chart, that says that Goldilocks could come all the way back down, make a little triple bottom down around the 1179 area. So we'll certainly pay attention to what's going on in gold. Now, we've got a lot of traders out there that are inside of the, we know this, they're inside of the minor equities out here. And the miners are going to go ahead and follow gold's lead out here. They always do, always have. If you take a look at the junior miners right now, they closed at $33.58 in the pre-market out here. They're all the way down to $29 out there. The Nugget, NUGT, that's the direction share. I believe that's a 300% ETF, and not 300, it's a 200% ETF. Here's what it's doing. Closed at 50.54. It's trading out at 46.35. Let's go take a look at the Nugget, because more folks are playing inside of the Nugget. So we know that's trading at $46 and change. What is that $46 and change out here at the open? Well, at $46, that's going to take you down below your unfair high. That's your red horizontal line going across my screen. That's priced at $47.44. Closed today below $47.44. It doesn't say that the trend to the upside is over. What you really want to be focused on is you want to be focused on $41.79. $41.79 is your unfair low. Now, that would be one heck of a day to the downside. Not that it can't happen, but that would be one heck of a day to the downside. You'll want to pay attention to volume, and your benchmark on volume is going to be the trading session from June 19th. That was a breakout session, 9.3 million shares out there. That says that support really is at either the bottom of that candle or the top of the prior candle. We're going to go with the top of the prior candle. That's the trading session from June the 18th. That price high, as you can see, is $38.50. That should act as support. If that fails as support, then you're taking a look at certainly a deeper retracement, but it will take its lead from Goldilocks out there. For those of you that trade the Nugget, the junior Nugget, the junior miners out here, let's go take a look at those levels for you. We'll give you that information. It's let me see what it's trading at first. It's trading out at $29.10. At $29.10, this is a daily chart that we have on our screen out here. $29.10. It's $17.68. That's your unfair high. That's quite a bit lower. Let's see. This thing broke out here. Its most recent breakout, it too was on the trading session of June 18th. And that high out there is $24.91. So it's right around that $24.91. The low here on June 30th at $23.33. Those are the levels you want to be watching for that ETF as well. That's what's going on inside of Goldilocks, going on inside of the miners out there, not the individual miners. We'll see those pop on the screen here this morning as the market opens. If we take a look at what's going on inside of the futures market here, let's go back, take a look at the daily contract. Let's specifically look at the NQ, because that has led the market to the upside. We'll see if it wants to pass off the baton to the Dow out here. The NQ, you can see it's running right up against resistance of its market profile high. If it can clear 39.18, not just clear it, but if it can close above that, that portends to higher prices inside of the market. Right now, the leader in the clubhouse, the leader that has been pulling the markets higher, it's been making a higher high on a little bit less relative strength out there. So 39.18, that is a key level for the NQ to be able to overcome. Right now, we've got the Dow futures. They're trading up a total of 75 points. NASDAQ up 18.25, S&P up 8. This is Steve Rhodes. This is Tiger Financial News Network. Welcome to the show, folks. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 88 right now. S&P up about 9 points, moving higher in the markets this morning. Shire PLC, SHPG is the ticker symbol, closed at 249. It's trading at 253. URS Corp, it closed at 5202. She's trading out at 5610. Let me see, what do I have out here? No, I don't see anything there. And earnings-wise, Whiting Petroleum Corp, WLL, is the ticker symbol. Looks like Whiting Petroleum Corp's going to acquire Kodiak Oil and Gas out there, KOG. Looks like a deal valued at $6 billion out there. It closed at $78. It's trading up at $82 as we speak right now. Citigroup was out with earnings. Let's go take a look at what it's doing and its stock chart out here. They closed at $47. At net income of $3.9 billion, total revenue of $19 billion versus $20 in the prior year out here. It's trading at $48.80. $48.80. Let's go take a look at the stock chart for Citigroup, ticker symbol C out here. At $48.80, it's going to be taking on a most recent swing point out here. Well, that's a trading session from July the 3rd. The top of that is at $48.71. If it can get above that, 48.51, quite frankly, is its unfair low out here. What it really needs to do in order to break out is get above 49.37. Well, really what it needs to do is clear the swing point from June 9th. That's got 14 million shares. That likely is going to be the target area. If it can close above 49.59, let's pull this back a bit. Let's go see where Citigroup could run into. Price-wise, well, here's where it's going to really struggle. If we take a look at Citigroup, let's do this. Let me clear off the chart here for a moment. We'll get rid of a few things. We'll just start with a little bit of a cleaner chart for you. We'll leave that up there. We'll take rid of this. We'll leave the volume. Yeah, we'll go ahead and leave the chart like this. So here's a relatively clear chart. So when you take a look at any stock chart, what you want to do is you want to let your eyes gravitate towards volume bars. You want to see what's going on there. That clearly sticks out for us as we take a look at this chart. You want to take a look at swing points. Swing points are the natural areas where price will go ahead and gravitate to the upside or to the downside. In the case of Citigroup, interestingly enough, they had a nice big wide-ranging bar. Now, you wouldn't have known it was a wide-ranging bar if you looked at the only candle that formed on the trading session of March 27th. Remember to fill in the blanks out there. Fill in the blanks. That means when you see gaps up or gaps down out here, you want to go ahead and fill in that space. You know, at least try to do it visually. That's a wide-ranging bar to the downside, a gap down. That's really all that it is, in this case here, with volume. 112 million shares to the downside. So what does that say? That says as we take a look at where the natural area of supply is, the resistance area, it's going to be the bottom of that session from the trading session of March 26, 2014. So 49.67 should act as some fairly significant resistance out here. We'll see what price does as it gets up there. This is the exact opposite of buying a breakout. This would be selling a breakdown. If it can close that window, if it can close 49.67, then it says, hey, we got to look elsewhere. And looking elsewhere inside this equity, we'll take a look. It's got another gap down right here that's also acted. Let's put a line across here that's acted as a resistance area, and that's at the $50.55 range. That was from January 23rd, January 24th when it gapped down with 59 million. So Citigroup has its work cut out for itself in order to get truly above resistance zone or selling areas. That's ticker symbol C out there. Watch at the 49.67 and the $50.55 range out there. Also to the upside out here, let's see, Candy Technologies, KNDI is the ticker symbol. What are they announcing out here? Looks like just some numbers, and although I don't see them, looks like they had a 230% increase from the prior second quarter out here. This is trading out at 16.10. Let's go take a look and see what this is doing here. So 16.10, yeah, it's got a nice high volume high out here from the trading session of March the 17th. That price level is 19.01. The high out there is 22.11. Made a slightly higher high the next trading session. No volume off of the high out here. In fact, all price did was, here's an example of price pulling back into a breakout area. And this had a nice breakout. That was on the trading session all the way back on December 30th, 2013, when this broke topside with 10 million shares. You can see that blue horizontal line going across my screen, acting as a support level. Last time that price was down in that area was back on April 28th. Now it's going to go ahead and take a run for its swing point highs. Looks like KNDI. Looks like eye candy to me. Looks like this is headed to the 2058, 2240 level. This is Steve Rhodes. This is Tiger Financial News Network. Thanks so much for joining us, folks. We'll be right back. We'll see how this market is going to pop, whether or not it's going to drop or not. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 100 points, trade on 17,044. S&P up 9.5 at 1977. NASDAQ Composite up 24 points, trading at 44.39. Russell 2000 up 9 points, trading at 11.69. NDX 100 up 16. New York Stock Exchange up 56. Goldilocks back $31 right now. Silver off 49 cents. Light sweet crude down 18 cents and leading the charge to the upside dollar-wise. We've got Whiting Petroleum up $4 and change. Shire PLC not too far behind them, up $4 as well. URS Corp up $3.87. Goldman Sachs up $2.59. Mylan Inc. MYL is the ticker symbol, up $1.96. Endo International PLC ENDP, that's up $1.84 to the downside. The Junior Nugget, the Nugget, both off $4. The GLD is down $3. Rand Gold off $2. That's down 2%. It's the gold miners that just simply have my entire my entire, well, other than GT Advanced Technologies, that's off 80 cents. Not a big deal out there. Let's take a look here at Rand Gold. GOLD is the ticker symbol. That's trading off right now. Here's a daily chart on it. We'll give you some. That was a pretty popular chart for folks to take a look at. If we take a look at Rand Gold right now, trading out at 87.30 out here. The numbers, the key levels to be watching during the day. 86.16, that's going to be your first area of support to test. That's its old market profile high. Old resistance should become new support. That's why we're taking a look at 86.16. It breaks through that area. Then you're looking at 84.13 as the level that you want to see it holding out here. Off of the lows, what Rand Gold, what GOLD has done out here, ticker symbol GOLD, what it has done is it has not, it's interesting. Here we go. It has not been able to close below one of its market profile lows. You can see that's a nice little signature of a trending market out here. We'll see. That's why 84.13 is going to be a key level. It's a ways from that. That's down $3 out here. That is on Rand Gold Resources. GOLD is the ticker symbol out here. Let's go take a look at what's going on inside of the currency market out here. Let's go take a look at what's going on inside. I believe it was the, let's take a look at the pound, the yen out here. Give me a moment. We'll pull up all the currency pairs for you. Well, first, let's take a look at the U.S. dollar index. U.S. dollar index right now trading out at $80.23 out here. Just moving sideways. What the U.S. dollar index has done, it broke through a little descending trend line out here. So we have seen a breakout. Here's where you see the U.S. dollar index. It works this way on all charts. It breaks through that trend line, comes back and tests it and rejects it. Looks like the U.S. dollar index wants to make a run for about the 82 level, 81.91. Let's go to our first caller. Let's go to John in Philadelphia. John, thanks for calling. Thanks for holding. How you doing this morning?
Hey, good morning, Steve. Thanks for taking the call. Hope you all had a good weekend.
I did. Thank you so much. And you wanted to take a look at the NDX 100. Give me a feel for what you're looking at.
I'm
John?
Sorry.
Go ahead. Yeah, just give me a feel for what you're looking at.
Sorry, bad connection possibly. If so, I'll try to rejigger. Steve, the NDX, the NASDAQ 100 index, continues here to lead or be a leading index in the stock market advance. We're right here at the NQ futures. The futures on the NASDAQ 100 are up here at 39.12. That's right at the highs of last week. It's actually exactly at the same price that we were literally 9:35, 9:40 a.m. last Monday. And we rallied 80 points off that low last Thursday. I wanted to ask you, given these developments, do you see any reason, is there any clue coming out of your work that would argue for an acceleration higher right from here? I want to be prepared for all scenarios, hence I wanted to ask you that question.
Okay. All right. Great question out there. And to answer that question, we need to take a look at a couple of different things that I would monitor. And so the first area to answer the question, is there anything inside my work that would suggest that we could see higher price? The answer is going to be yes. I'm going to put up this first chart out here. And the first chart, as we take a look at the daily chart, is a continuous contract here for the NASDAQ futures. What they show us is that the NASDAQ has been traveling in a 300-point consolidation range, John. And what I'm using for a low of that consolidation range is Uncle Ben Bernanke's going-away birthday party. That was on December 18th out there. And that happened to really mark a nice low, 34.15 out here. And price came back and it tested that area two other occasions. So in essence, you've got a triple bottom down there. That's at 34. It tested on February 5th. It tested again back on April 15th. Significant lows in the marketplace. The high of that consolidation is the 37-37-ish area, the March 6th, which we know is a pretty significant key high inside the market. And when price got up to that level back on May 29th, it just simply took 4 days before it broke through it. It broke through with a wide-ranging bar. What that says, if we take a look at this chart, it says that if the NASDAQ, if the NQ continues higher, that its minimum price target which would be equal to its consolidation, would be 4,100. It's trading at 3,900 right now. So that would be another 200 points to the upside. That's what a little bit longer-term consolidation pattern to me looks like inside of that. What needs to take place next in order for the NASDAQ to continue moving higher? I would say I would respect the market profiles that have been established inside this on a daily chart. 39.18 is the magic number to pay attention to. I would say a close above 39.18 today would be suggesting that the fruition of moving up towards 4,100 would be the more likely outcome. And that's what I see on the daily charts for those two. The other element that would add to that would be two other things. And the two other things, John, that would suggest that price could move higher would be the following. One, if we take a look at the Euro-Japanese yen, I'll pull that chart up on my screen out here. And the Euro-Japanese yen, which looked like it was going to falter 2 trading sessions ago, all that price did was it came back into a level of support. And if it can hold this level, that meaning the 137.65 area, then it has room to run to the upside. And if it continues to run to the upside, then that should put some fuel in the marketplace. Then lastly, I would take a look at the VIX index, which right now is trading at 1159. It's below its 50-day exponential moving average. That happens to be 1204. It's at 1159. If it closes below 1204 today, to me, those are the ingredients necessary in order for the markets to move higher. Just the opposite, obviously, for the markets to either consolidate sideways or maybe do something else, meaning if the NQ doesn't break 39.18 and the VIX gets above the 1204-ish area, you'll have another rejection of that 50-day exponential moving average to the downside. How does that sound for you as far
Steve,
as
I appreciate those parameters. I'm glad you reiterated something I actually forgot about that I know you've shared the past couple of weeks, namely that consolidation zone on the NDX over the past number of months.
Yes.
Can you just clarify for me that 4,100 level? Is that essentially what I've heard other traders refer to as kind of a measured move target? Is that the idea?
That's exactly it. It's when you break a consolidation, the price target, that's what we're really all doing, is trying to identify price targets in order to do any kind of reward to risk analysis out there. And what we typically find is that when a consolidation is broken, that your minimum price target, and I say minimum because the move is usually equal to or greater than the consolidation, that's where it would travel up to. Now, we always use those as guidelines. So, folks, when I say 4,100, I don't necessarily mean 4,100 on the dot out there, and it doesn't have to stop there. So that's exactly right. So, good point. Thanks for mentioning that. Now, what I will say on a daily chart inside the NQ, if you're watching this on Tiger TV, folks, is that it's last time that it ramped up here into the July 3rd level. It moved into the extreme overbought condition of its 14-period relative strength indicator. It got up to 82.85. Clearing 70 starts putting it into an overbought zone. Now, that's also very bullish out here, and it worked its condition off by just simply moving sideways here so far. As it makes higher highs, as long as the relative strength indicator continues to ramp upward, then we're in pretty good shape out there. The other thing, John, that can get in the way of this is the underpinnings of the overall market. And what I mean by that is the New York Stock Exchange. I know that you've mentioned on occasion the Wilshire 5000. I know that you have tracked that. Now, I haven't looked at the Wilshire in a while out there, and I'll ask if you have looked at it and what that's telling you. I can tell you first on the New York Stock Exchange, it is in bearish territory. Its price oscillator is below zero. The summation index, the McClellan summation index, is down below. The zero is turned down. It needs net advancing issues today of about 2,329 or more in order for the bulls to take charge of the market. So the underpinnings of the market breadth, hasn't caught on yet to this bullish move upside out here. But have you looked at the Wilshire 5000 by any chance?
Steve, I have. To that point, interesting you may raise that observation about the New York Stock Exchange composite. The Wilshire 5000, frankly, is the broadest measure of the U.S. stock market, but it tracks. It is so closely correlated to the Standard & Poor's 500. For most periods of time, one does not need to examine the Wilshire. One can focus instead on the S&P 500. You've made the point clearly that on this bounce from last Thursday's low, the NYSE index is lagging the NASDAQ 100. And the S&P 500, or its sister, if you will, the Wilshire 5000, is merely an aggregation of those two. Of course, since the NASDAQ composite, the New York Stock Exchange composite don't have any overlapping issues, the S&P and the Wilshire 5000 are just essentially a combination of the two. And I asked about the NASDAQ this morning, given that that is the leading index, the one that is back at the highs right here, right now. So I don't draw any specific conclusions looking at the S&P nor the Wilshire, and have focused on the NASDAQ 100 since it is the leader, and we're in clearly a bull market.
Yes, and so if we correlate as you're pointing out, the Wilshire to the S&P 500, then I'd take you over to the ES Mini. And if we take a look at the ES Mini, we took a look at the levels inside the NQ, what it needs to do to have a bullish breakout. Inside the S&P futures, it would need to close today above 1974.05. So we've got both the NQ and the ES Mini taking on some potential resistance zones using their market profiles. And if we round it out and just take a look at the weak link out here, which has been the Russell 2000, it's got to close above 1175.02. So the perfect storm to the upside is the Russell closing above 1175 and the NQ and the ES getting above their market profile resistance highs out there. And then I think that puts it all together.
Yes, thanks so much for that. I just might mention this rally in the NASDAQ 100 began, of course, back on April 15th down at that 3410, 3415 zone. I will tell you, I am looking for this week as a candidate for a period of time for this rally to complete, which does not argue for a major bull market top, but merely a completion of this very powerful rally phase from April. I'll further tell you, it's just, I find it very interesting. I'm looking at the NQ futures 39.18 at the highs. The NASDAQ, the underlying, the CAF index is 39.25, 7 points higher. There is a nest of figures coming in on the NQ futures, starting at 39.32. That's 14 points higher, up to about 39.48. And a nest of Fibonacci resistance and expansion levels come in that 39.32 to 39.48 zone. One is the Fibonacci 786 retracement of the top in back in the year 2000. There's an expansion calculation based upon the dip that occurred from March 4th into April 15th. And then shorter term, there's a Fibonacci expansion mark just off last week's decline from Monday the 7th down into Thursday the 10th. And so three figures come in that very tight zone, 39.32 up to 39.48. And I'm kind of thinking, if we get up into that range, that's just another 20 to 30 points higher, to be prepared for selling to come in. But if we move, 20, 30 points over that, I'd be looking at that 4,100 target you mentioned. So I kind of see this week as being pivotal potentially.
Perfect. Hey, John, thanks so much for calling. Thanks so much for sharing with our listeners out there. And have a great trading Monday. And look forward to talking to you soon.
Thanks, Steve.
Take care. Folks, this is TFNN Steve Rhodes. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. We've got the Dow is up 124 points. She's trading out at 17,068. S&P is up about 10, trading at 1997. As far as market breadth out here, decliners are advancing issues, outpacing decliners by about a little over 4 to 1. That's a nice move there. Still not enough, though. Still close, but no cigar, as we say. Again, 23.29 is what's needed in order for the price oscillator to get above zero right now. Net advancing issue 1,748 inside of the market. If we take a look at couple of things here that are moving inside the market. Let's say Priceline is up about $10 right now, up about 0.8%. Let's go see what Priceline is doing. Now, Priceline here has been able to hold its, well, it hasn't even come down. Yeah, it has. Hold the B point. Potentially to be equal C to the downside. That pattern is still in play as we speak. This had a little downdraft session that was on June the 13th. Made a little bit lower low the very next day, June 16th. That low out there is at 1183. Volume down there, 751,000 shares. Last time down it was tested was 765. Friday's bounce was 610 to the upside. So far this morning, done about 151,000 shares. So one of the leaders in the clubhouse here inside of the NDX 100 for sure is Priceline. Now what Priceline is also doing, it's got this high volume low out here. It really does say at some point Priceline is likely going to go test at least the May 8th area. That's at 1087.26. So any bad news, expect that to be an area of potential support inside of Priceline. Also to the upside out here today, let's see if we can find anything new that maybe we haven't looked at. Let's look at Visa. Let's go see what's going on with Visa. It's up $2.70 out here. Looks like it's over its most recent set of swing points out here. So Visa, it is trying to take on a B point of, it's already done that. Let's see if it's taken out that B point with any kind of volume. The trading session here that we're looking at is May 30th. 1.5 million shares out there. It got up and over it with 1.3, 1.6. So it did close above it. That was on the trading session of July 7th. So A to B equals CD pattern for Visa at the upside. The A point that I would use here, let's use the smaller one. It's come off of April 25th. That's our A point. Our B point is on May 30th, and the C point down here would be June 25th. It says 1-to-1 A to B equals CD. You ought to see Visa move up to about 224.70. That's your 1-to-1 A to B equals CD. That's the price target on it. So far this morning, 340,000 shares. So good volume as it passes that May 30th high that had 1.5 million shares. So Visa looks pretty good. Now, at that stage there, Visa probably is setting up a little Gartley sell pattern. Here, I'll show you what that looks like. It'll be a little bit easier for me to go ahead and draw that in since it's a leading pattern. Let me clear the deck here. Oh, let's see here. It's a single. There we go. And as we take a look at leading indicator patterns out here, let me just clear the decks out here, and we'll take a look at the retracement levels. We can do this in less than a minute. No problem out there. We'll see that the 0.786 area is at 226.80. It would look to me, I don't recall what the price projection of that A to B equals CD was. It's probably right up in that area, but it would look like Visa would form a nice 0.786 Gartley sell pattern right around the 226.85-ish level. That doesn't mean that you sell it right there. You'll want to see some kind of reversal in the marketplace. Folks, it is Magnificent Monday. Thanks so much for joining us here at TFN. Welcome to all of our new listeners out there. Stay tuned. The Money Master Show is up next, hosted by none other than yours truly out here. If you're off to start your Monday, thanks so much for joining us. Have a great trading day, a great day ahead of you. We'll look forward to seeing you bright and early tomorrow morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.